Dr. C. Amida Selvi, Assistant Professor and Head, Department of Business Administration, UG, V.V. Vaniya Perumal College for Women, Virudhunagar. Now we are going to discuss about the types of budget. Before going into the types of budget, we should know what is a budget. A budget is a plan of action expressed in financial terms or non-financial terms. Financial means it is expressed in money. Non-financial means it may be expressed in units, tons, kilograms, etc. It is prepared for a definite period of time. From the meaning, we can derive the features of a budget. It is always prepared for a definite period. It is expressed in money or quantity. Budget is a statement of objectives to be attained, to be achieved in the near future. Next comes budgetary control. It is a system which uses budgets as a means of planning and controlling all aspects of producing and selling commodities and services. Commodities mean goods or products. Example, pen, pencil, eraser, table, chair, etc. These are known as commodities. Services include transport services, hospital services, etc. Now we are seeing the steps in budgetary control. The first step is establishment of budget. Then recording of actual performance, continuous comparison, remedial action, and the last one, revision of budget. First one, establishment. Establishment means preparing the budget. Let us assume the budgeted production is 1000 units. Then second, actual performance is going on. The actual production may be 900 units. Continuous comparison. Comparison means we have to compare the budget and the actual and find out the deviation or the difference. Here the budgeted production is 1000 units. Actual production is 900 units. So the difference is 100 units. 1000 minus 900 is equal to 100 units is the deviation. We have to analyze the deviation. The deviation may be due to non-availability of raw materials, shortage of labor force, power failure, breakdown of machinery, and so on. We have to find out the real reason and rectify the error. That is what remedial action. Then, if necessary, the budget may be revised. Now we are seeing the types of budget. The budget can be classified on the basis of three categories. First one, according to time. Here there are three types. Short period budget. It consists of 1 year period. Long period budget. It consists of 5 years to 10 years. Then current budget. It consists of a month or a quarter period. Then second classification is on the basis of function. Here the first one is sales budget. It is an estimate of expected sales during the budget period. Before preparing the sales budget, the factors like past sales figures, salesmen's estimates, plant capacity, availability of raw materials, seasonal fluctuations, availability of finance, competition, orders on hand, all these factors must be considered. Second one, production budget. It is an estimate of quantity of goods that must be produced during the budget period. We can find out the production by using the formula budgeted sales plus desired closing stock minus opening stock. Materials budget. Materials budget may be materials requirement budget and materials purchase budget. Materials requirement budget is an estimate of total quantities of material required for production during the budget period. Materials purchase budget is an estimate of quantities of raw materials to be purchased for producing the product. Next one, direct labor budget. Detailed requirements of direct labor and its cost to achieve the production target. Direct labor means labor which is engaged directly in the production activities. Factory overhead budget. It indicates the factory overhead to be incurred in the budget period. Examples of factory overhead are factory rent, factory lighting, depreciation on plant and machinery, etc. Here, the expenses are classified into fixed, variable and semi-variable expenses. Fixed means it remains constant for a period. Variable means it changes, it varies according to the production. When the production increases, the factory overhead also increases. When the production reduces, the factory overhead also reduces. Next one, administrative expenses budget. It is an estimate of administrative expenses to be incurred in the budget period. Administrative expenses, example, office rent, office salaries, printing and stationery, etc. Then next one, selling and distribution overhead budget. Estimate of selling and distribution expenses to be incurred in the budget period. Examples of selling and distribution overhead are transport charges, traveling charges, salesman salary, warehouse rent, etc. Capital expenditure budget. Estimated expenditure on fixed assets during the budget period. Fixed assets means land and building, plant and machinery. Separate budget may be prepared for each item of asset. Cash budget. Estimate of receipts and payments of cash during the budget period. Cash receipts may be cash sales, cash received from debtors, etc. Then cash payments may be cash purchases and payments to creditors and other payments, rent payments, interest payments, etc. Then next one, master budget. It is prepared incorporating all functional budgets. By considering all the functional budgets, we can prepare master budget. Third classification is on the basis of flexibility. Fixed budget, designed to remain unchanged irrespective of the level of activity. Then second one, flexible budget. It is designed to change in accordance with the level of activity actually attained. For example, if we are running at 80% capacity and we have the plan to increase our capacity to 90% means we can prepare a flexible budget for 90% capacity. Thank you.